Hello traders, we have an explosive move today in the market, so I want to do an S&P 500 E-mini futures demo. Here's how we trade it. So the market opened flat today, nothing going on, and then all of a sudden on the next 5-minute bar, we had an explosive move, volume going crazy all over the place. As soon as I saw that, I bought the futures in the chat room, and I knew that when we closed close to the high that we're going to have further upside. I took profits in here, waited, saw a couple of doji bars. What did this tell me right here? This means that all of these gains are here to stay. Profit taking cannot set in. Everybody's trying to digest the news. They read the news. Doesn't matter what it was because the selling starts to abate and then we get ready for the next leg higher. So I got back into my futures trades here and I actually leveraged up. I took quite a large position. I posted that in the chat room today. Boom! There went the market. So now I recorded my first video this morning and you could see these long green bars closing on their high. Typically when you get this type of price action, you're going to get a nice small little retracement and then things are going to settle down and then boom, you're going to get your next leg higher, then you'll settle a little bit and you'll get your next leg higher. So typically in this type of environment, you want to stay long. You do not want to be shaken out of your long positions. If you got long in here, you've got a lot of cushion. You can give it some breathing room. The temptation on day trades, especially when the market's been compressing intraday like it has the last 2 months, the temptation is to immediately lock in profits and to take them. Well, on moves like this, you actually want to just sit on them and wait to see if you get that next leg higher and the next leg higher. The first pullback is almost always a buying opportunity. Now, I do also want to say that when you get one of these long bars like this, closing near the high and the S&P futures are trading like crazy, you can just see the price movement is just brisk, brisk, brisk. It's just boiling over. You have to almost buy stupid. Typically, you're not going to want to chase anything, but when you get a long bar like this, you just got to say, I'm not going to get many pullbacks. You can wait for these dojis in here, but sometimes you'll get a move like this and you won't get these in between. You just get boom, 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 more legs higher right out of the gate. So buy here, try and weather the storm. Your ultimate stop is halfway up this long green candle. Never even got close before the buyers came in. You had 2 long tails under body. That's also a bullish sign. You get your lift off. So what happens after that? Well, we get a red candle and another red candle. I didn't like this candle here closing on the low, and this was my stop out point. I wanted this long green candle to be preserved. Well, guess what? It wasn't. We came down easily. We took it out. I stopped out my position here, took my profits, and once I saw how deep this long red candle came down, I thought, uh-oh, this is not a particularly good situation. So this is the long green candle, the second long green candle that would provide us with another stop out point. I'm not going to wait for it to retrace that much, but we tested it with ease. So now, at this juncture right here, we've got a little doji here, and then we have a bounce. I was telling everyone in the chat room, we cannot buy this bounce right here. This is no good. Why? Because this pullback from the high is too deep. If buyers were lined up, they never would have let the market get down this low. We never would have seen that type of selling pressure. We would have maybe retraced to here, gone sideways, and then taken off, but we would not have seen that type of profit taking. So on this first bounce here, I said, as tempting as it is, don't buy. So the market rallies. You can see this downtrend line that was started from these 2 bars right here. We get right up to it and we test it, and then we have an inverted hammer. That is a bearish pattern. No good. Then what happens? Long red candle closing on its low, tail above body, no good. Another tail above body, and we're starting to come down and test this support level very, very easily. Look, this bounce only lasted about 15 or 20 minutes. That's no good. No good. So we've got to let it come in. We have to wait. We have to be patient. So now we've got a sequence of long red candles closing on their low. Now we know for sure that we've retraced far enough from that high to where we're probably not going to challenge it throughout the course of the day once we've retraced this far. We come all the way back to this little compression right in here and we find temporary support. Now we've fallen back below it, and now we're getting a nice little bounce, and we're getting a bounce to this downward sloping trend line. So how do we play this from this point on? Well, we know that we've got pretty brisk trading on both sides. Let's take a look at the daily chart, and you can see this inverted hammer right now. We don't know. We're going to chase and make a nice long green candle by the close of the day. I don't know. We are above the prior all-time high, so that's good news, and that should be our support level, and that's right around the 315.50 level on the SPY. So we're going to continue to watch this and go back into the 5-minute chart, and that's 315.50 is right here. Guess what? It's right where we bounced from. Okay, well that makes sense. Now we're getting long green candles closing on their high. We have broken through this downward sloping trend line. We do have a bullish 10P cross. So let me talk about my indicator a little bit. This is not some derivation from other technical indicators and I simply change the time frames on it. And no, it's not anything like this. This is an indicator that I spent 10 years developing. It is the only thing that I use to day trade the S&P 500 futures. So early, you can see nice bullish crossover here. The red line is above the blue dotted line. It's saying get long, stay long. Where does it cross? Crosses right up here. Right here. Not down here, not down here, not down here. This indicator is anticipative. It is early. It predicts price movement. So here it's saying you got to be careful. I didn't pay attention to it because I was still paying more attention to this. Yes, I knew that it crossed, but I thought we'd get a couple of little red bars on the downside and then we'd take off to the upside. Didn't happen. But this was a good opportunity to take profits, and as soon as we came and took out that low, I respected it and said, okay, I'm out. I'm good here. So now that it's come down, it had a deep trough right here, right in here, but you still have to wait. And I told everyone in the trading room, I want to see some long tails under body, and I want to see us hold this particular support level. We didn't get it, broke below it, in fact, broke below that tail. Now we're starting to get some constructive price action. There is a downward sloping trend line right here that's been violated to the upside. That's good. So we've got 10P crossing off of a deep trough downward. We've got some positive long green candles here. Is it time to buy? I'm not long right now. I've been doing the video, so I'm watching it right now. Even if I were trading, I would be watching it because this type of steep profit taking has me a little bit leery. What I'd like to see is I'd like to see the market come down just a little bit and give me at least one bullish hammer so that I know that the buyers are still lined up at this level. So for the rest of the day, this 315.50 level on the SPY, it needs to hold. Okay? We want to see that level hold. We want to see the market be able to grind higher. That's a natural support level for it. So on any little dip here, I will be trying to buy, and that will be my stop out point. Love to see a couple of long tails under body in a row. That would get me pretty excited. The other thing that would get me excited toward the afternoon session is if the market retraces, 10P drops back down, we get another deep trough and a crossover above, and we make a higher low. So we find support above that 315.50 level. Then I would buy also, looking for a later afternoon rally. The longer term macro backdrop is actually good right now. So we've got a lot of positive news. We have a likely US-China trade truce going to happen. We have the USMCA was just signed. We have the elections happening in England with a likely Boris Johnson victory that should produce a orderly Brexit. That's good news. So we've got a lot of good information out there. The market simply got too far ahead of itself at a forward PE of 17.5. There is going to be some profit taking along the way. That's exactly what happened. Has everything deteriorated? Should we be looking for a major reversal off of a top, a buying climax here? I don't think so. I think that things just got a little bit too fluffy. Everybody rushed in on the new high and they got washed out. Now we're going to compress and consolidate a little bit, and then perhaps later in the day we'll have a more orderly upside breakout. Nice grind higher. That's what I'd be looking for right now. I think that all of the panic buying has kind of settled in. This was nice, tight, steep selling. So I'm not going to get long until we come down and form a higher low, get this 1OP indicator to cross one more time here, then I would be interested somewhere around the middle of this long green bar. I think we can find support. That's the 315.75 level. If we come down, test that low, bounce a little bit, very brief, shallow bounce, and then we take this level out with ease, now all of a sudden the previous all-time high has failed, and we start looking at a bearish hammer that turns red, because the programs will kick in and you'll get a long inverted bearish hammer. That would be a little bit problematic. I'm not looking for it, okay? I am not looking for it. If I had to put a probability on it right now, I'd say about 20% chance of that happening. The more likely scenario is that we compress, we consolidate, everybody takes a deep breath. Yes, the news overall is still good. Okay, let's establish that support, and then let's inch higher into the close. The market wants to float higher. So as long as it does not get overextended on the upside, we will continue to grind higher little by little by little. Has to be very gradual steps because of stock valuations. When you get these big blow-offs on the upside, you're going to get profit taking right now. So it's a 3 steps forward, 2 steps backwards type process, or just little mini baby steps forward each day. The market would be fine with that as well. So this still sets up excellent for selling bullish out of the money put spreads. We like that strategy. I think we're set up for some decent S&P trading today. So just absolutely made a ton of money here. Got long in here. I caught this early and made 5 points, but my position was not huge because I wanted to see if this was going to pull back. I did not know what the news was. I didn't have to know what the news was. I just knew this is a buying opportunity. But when we compressed in here and I saw that the bid was still strong and that the gains were holding, like I said earlier, be a stupid buyer when you see these types of setups. So I bought in here, rode that, took profits right in there, made all that I wanted to make. This is one of my better day trading days in the last couple of months because I really leveraged up on this pattern. So right now, hitting a little bit of resistance, watching everything. I hope that this technical analysis helps you with your S&P 500 day trading. I post this type of commentary all day long in the chat room, especially when we get big market moves like this. Thank you. We'll see you tomorrow morning.